Hello and welcome to Bitcoin Hub. In today's episode, we have a very special guest, and there had been a lot of questions about what Bitcoin is, and there were a lot of queries on where do we get started from, what is Bitcoin, how do we approach it, is it a financial instrument, is it an asset, is it legal, is it safe? There are all sorts of questions which a lot of people had queries with. Uh, just a disclaimer to put it out there. This is not a financial advice, and I'm sure you'll get to know about it in a few minutes as well from our guest. And what we intend to do with this is we want to educate people about the basics, about how its implications in the finance is, and how the other asset classes compare with it. So I present to you our guest for today. Hey Varun,
Hi Nihal, how are you?
I'm fine, thank you. How are you?
All good.
Great. So before we dive right into the presentation and which you've made, and I've gone through that presentation, and it's very simple yet effective for explaining about Bitcoin to a lot of people who are new to this. Before all of that, I wanted to understand your journey in how you found Bitcoin, and a basic introduction about yourself would be great.
Yeah, definitely. Yeah, so my name is Varun. I have done my engineering plus MBA. So I work with a venture capital firm right now. I basically have a background. Firstly, I did 2.5 years of a job as a engineering analyst, with a telecom firm, and then I did my MBA, and then I entered the finance field, and then I've been working with firstly an auditing firm for the last 4 years, and then for the last 2 years with a venture capital firm.
Okay.
So you could say I have uh, a more deep connection with finance as compared to engineering in that sense.
Right. So you started your journey with engineering and then drifted to finance.
Yeah,
Okay.
yeah,
So I had a similar background as well, where I started with engineering, but then I drifted to marketing.
right.
And so I understand where you come from as well to some certain extent. Uh, so great, that's nice. How do you begin your journey in Bitcoin? How do you discover and find Bitcoin?
Yeah, that's a really nice question. So I've always been an investment enthusiast from the early days of my MBA. Because I so basically I entered the field of MBA and finance because I got inspiration from my dad because he was and he is actually an investor even today. He follows the stock markets, he invests his own money, and he's very aware of what kind of sectors uh, are best to invest your money in, what kind of companies are doing well. He gives advices to a lot of his friends in that matter. So he was basically my inspiration in getting into the investment field, right? And that is why perhaps I went into finance and I inclined towards finance more than marketing when I opted for MBA, right? So
Okay.
basically investment was something which I was inclined towards from the very beginning of my years of my life. And then
Right.
what happened was eventually in during my MBA days when I was still studying, I got to know this thing called cryptocurrency, and I was not really sure what it is. I just went over the internet, briefly studied what a cryptocurrency is, and then
Mhm.
I came to know that there are these various exchanges which should not even need a KYC. You can just
Mhm.
register and then you
Mhm.
can just deposit your money and then start trading. You know,
Mhm.
so that's what happened to me. I started trading, and because it was the 2017 2018 bull market, I made money without doing anything. So
Yeah.
you could
Yeah.
say in the hindsight I got lucky, but I felt like I was a genius. So I rode to the top where Bitcoin was almost $20,000, and
Right.
then I sat there not knowing what will happen in the future, and then all
Huh.
my portfolio crashed and came down to the lows of maybe 5,000 Bitcoin or something like that, right?
Right. It was
And then the
almost
news.
sorry, it was almost an 85% drawdown, right? If I'm not
Yeah, yeah,
wrong.
yeah, yeah.
Yeah.
And then the
Go
news
on.
came out that RBI is banning Bitcoin and all the cryptocurrencies. So I was like, okay, this thing is done. So I liquidated all my portfolio. Fortunately, I was still in profit because I started from 1,000 or 2,200 Bitcoin, something like that. So I liquidated my portfolio, shut the shop. ठीक है, सब कुछ हो गया. Let's go back to work. You know. But then 4 years after that, the 2021 bull market came up, and I was like, okay, this thing is not dying. So I need
Mm,
to look into this because it did leave a good taste in my mouth earlier,
mm,
because as I told you, I had made profits, even after an
right,
85% drawdown. So
right.
I felt like it was my calling. I need to go back and see what this thing really is, right? And that is where
Okay.
I began a deep dive, started to
Mm-hmm.
really understand what this thing is really about. and and that is where I learned that basically a majority of what we know today about money, economics,
Mm,
investing is just half baked knowledge. We do not understand it from the very basics, from the very root,
right,
right?
right.
What is money? Why do we need money? And why are these investment products all around us? Why are people so confused? Why do we need to do two PhDs, one in our normal work and then second in investments as well, just to store the value of our saving. So those
Yep.
are some of the deeper questions which made me go deep into this field and understand
Right.
Bitcoin. And well, here we stand today, where I have basically drawn a conclusion that Bitcoin is going to change the paradigm in finance completely, completely. And we'll
Okay.
definitely discuss on those topics. So I think we should start with our presentation.
Perfect. Cool. Yeah. Before we begin, there are a lot of apprehensions which are faced by those in power when you come like from the financial sector itself.
Right.
You
Right.
have the RBI telling certain things about Bitcoin and cryptocurrency that they don't have underlying value. I hope
Yeah.
we'll discuss all of that in the presentation as well,
Yeah. Yeah.
right?
Definitely. Definitely.
Okay, great. Cool. Let's begin without any delay. Yeah, sure.
Okay. Yeah.
Let's start.
Yeah, thanks, Nihal. Sorry. This is the first slide of my presentation. So, just to let people know, this is a presentation that I have made for my friends and family to explain to them in very simple language what is Bitcoin, what are the technical aspects of it, and what are the financial implications of it, and why it is made for everyone. Everyone can start investing if they understand a little bit of basics of Bitcoin, and then just get into it. So here I start. This is a very basic disclaimer because I'm not a financial advisor. This is just for educational purposes. Right? This is basically my background, which you already discussed. I have an engineering and an MBA finance, worked in business valuations, venture capital, right? And this is my first section. So here I basically I'm trying to tell people that Bitcoin is standing uh, at the meeting junction of finance and technology. Because uh, there has been no technological breakthrough in the concept of money since last 200 years. So we have moved from gold to fiat currencies. These fiat currencies were firstly pegged to gold in the initial years, and then the peg was removed, right? Which a lot of people believe, and even I am adding to that school of thought, that is the root of the problems the society is facing right now, right? So what Bitcoin is doing is it is bringing a very fundamental innovation in the field of money, right? And that is basically is changing everything, right? So let's look into that. We'll start with the very basics of Bitcoin as a technical concept, right? What is Bitcoin? What is a cryptocurrency, right? So these are the jargons or the keywords that are thrown around all the time. So let's look into those and let's understand in a very easy manner what these are, right? So Bitcoin was invented in 2008 by an anonymous figure called Satoshi Nakamoto. Firstly, people do not know who this figure is. Is this a single person? Is this an institution? No one knows that for sure, right? Because he has now completely gone off the map, right? The second thing to note here is that people think that Bitcoin just came out of the blue 15 years ago, but that's not the case, right? Bitcoin basically the concept of this network of Bitcoin has basically built on various uh, technological inventions or smaller inventions or innovations that have been made in the last 40 years, right? So it's a culmination of all those pieces of technologies put together in a very perfect manner, which creates some money which till this point was not able to exist on a standalone basis on the internet itself, but now it does because of Satoshi
Okay.
Nakamoto, right?
Sorry to interrupt there.
Yeah.
Can you go back to the slide? So this on the right hand side is the Bitcoin white paper for
Yeah.
anyone who's interested and who wants to know in detail. This is openly available information on the internet. It's called Bitcoin White Paper on bitcoin.org. If you visit that website, you can download the white paper and read it for yourself. Now, for anyone who's beginning their journey into Bitcoin, this is an essential that you read this first and then dabble into it. Yeah, please go ahead.
Yeah, definitely. But I'm sure even after reading the white paper, people will be very confused because they are not
Yeah, yeah,
very technology savvy, because it's a
correct,
very
correct.
deep computer science object, right?
True.
So that is why my effort to basically make it simple for everyone.
Fair enough.
So Bitcoin is a cryptocurrency, right? So what does that mean? It means that Bitcoin is an independent currency which operates on the internet. Independent meaning it is not mandated or issued by any state or any government or any sovereign or any third party or any company, right? It's completely independent at this point of time, right? Bitcoin. So obviously, Bitcoin was released by Satoshi Nakamoto, but eventually, people took over, and now the control has shifted to basically a decentralized base where no single party or no single government has control over it, right? Bitcoin is also decentralized, and it is encrypted using SHA-256 encryption, right? We don't need to dive into details of what that is, but basically what we need to understand is that the network is secured using this encryption, right? And because of this encryption, as well as the concept of decentralization, where the software exists on thousands and thousands of computers all over the world, because of a combination of these two factors, it is virtually impossible to hack the network, right? So at this point of time, it becomes the most secure network on the planet,
Yeah.
right?
And might I add, this encryption is also used in the current banking systems
Yeah,
and other important security measures across the world. So it's not
right.
something out of the blue which is designed only for Bitcoin. Let's
Yeah,
go.
but as I said, they are not decentralized
Correct. Of course.
databases, so they are still
Yes.
vulnerable to hacking, right? So that is
Correct.
where Bitcoin is different.
Sure.
So Bitcoin is a decentralized network. As we already discussed, it exists on thousands of computers all across the world, right? So when a software or a database exists on one computer, one server, or a few servers, it is easy to hack because uh, people can gain access if they are wise enough or if they are cunning enough. But when a
Mm.
software exists on thousands of computers, it is not simultaneously possible to hack all those computers, right? It becomes way more difficult. Like the complexity increases to such an extent that it becomes virtually impossible to hack. And that is what brings this robustness to the network of Bitcoin. That is what brings the trust that Bitcoin has gained over these last 15 years, right? Because of the decentralized protocol. People would also remember that there's a network called the Tor network, right? It's also decentralized, and Tor basically makes pirated movies and softwares available to everyone around the world, but it has been impossible to stop exactly because of this point. It is decentralized. Now, obviously,
Okay.
decentralization is just a technology, right? You can use it for a good or a bad purpose, but that's not
True.
inherent to the technology itself. If people say that a Tor network is bad and that's why decentralization should not be, used, that's not the correct way of looking at it, right? And that also sometimes that aspect also sometimes gets stuck with Bitcoin itself, that it's used for bad means. But we'll look into that as we move forward with the presentation, right? So
Sure.
for people to understand, it's a decentralized network which brings the robustness and makes it impossible to shut down by any one country, government, or any even a cohort of governments, right?
So one second, I had a question there. Uh,
Yeah.
when you say it's run on thousands of computers, is how does that work? Because is it like a software which is run on the independent computers? I'm trying to understand here for the audience on behalf of the audience as well.
Yeah.
When you say it's present on thousands of computers, how exactly? What do you mean by that?
So historically, there has been a very beautiful problem called the Byzantine generals problem, right? What
Okay.
that problem basically says is that if if there are two army generals standing on the opposite side of a city and they want to capture the city, how do they communicate effectively without uh, making their communication vulnerable to the parties involved within the city, right? So basically, without uh, putting their strategy at risk of the opponent knowing it, right? So
Okay.
that is the problem of secure communication. which has been an age-old problem. So
Okay.
what the Bitcoin network very geniusly does is it creates this kind of a consensus mechanism where all these computers need to agree on one single point of truth, and that single
Okay.
point of truth is the Bitcoin decentralized blockchain, right?
Okay.
So each and every computer has to agree that this particular chain of the Bitcoin network is the only one which is going to be followed in the future, and that is the only one that they need to tag to and they need to follow, right? So
Fair
because
enough.
everyone
Understood.
agrees, yeah.
Yeah. Yeah. I understand that. So, but for a layman, say a person who is not very well versed with the whole concept, with the whole,
Hmm. Hmm.
this thing, can they use Bitcoin without running the software on their computer?
Yeah, definitely. So
Okay.
this consensus algorithm is basically a way to make the network work, right? But
Okay.
when you interact with the banking network or the Visa network, you don't be a contributor to the network, right? You're not running the network. You're just a user of
Right.
the service of the network. In the same way,
Correct.
in the Bitcoin network also, you are a user of the network. You can transact using Bitcoin, but you don't have to run the network itself. If
Got it.
that makes sense.
Understood.
Yeah.
Yes.
Yeah.
Let's continue.
Yeah. So moving forward, Bitcoin is based on the blockchain technology. Obviously, everyone knows that, but in a very simple layman understanding, what is a blockchain technology? So any software or any database that you interact with, let's say Twitter or Facebook or Instagram, if you click on anyone's photo or if you click on anyone's profile, you will be immediately taken to that profile and you can see the details of that profile, right? So the response is immediate, and that is how a normal database works. But a blockchain database, this is not immediate response does not happen. Rather, what happens is all the requests are clubbed into batches, and these batches are processed every few minutes or at a regular interval, right? In Bitcoin network, that interval is 10 minutes, right? So during these 10 minutes, all the transactions that are requested will be batched together and it will be processed in one single batch every 10 minutes, right? So if you make a transaction, the transaction will not go through uh, before 10 minutes. You have to wait at least 10 minutes for the transaction to go through, right? And it is recommended that you wait for maybe 30-40 minutes for 3 to 4 confirmations that the blockchain has actually recorded your transaction for you to confirm that the transaction has gone through, right? So that's the difference between a normal database and the Bitcoin database, right? So people would say that isn't that bad if you're reducing the response time of the network? That's bad for the user interaction, right? But what happens is it's a pro to con situation, right? So there's a benefit, but there's a drawback also. The benefit is that this has been intentionally designed in this way because Satoshi was trying to make a very secure network, a network that could store financial details of everyone on the planet, right? That's a very important job. So the network has to be very strong and very robust, and that is why this network was intentionally made slow, right? On the other hand, obviously it is slow, so it is difficult to transact on the network similar to Visa or Mastercard, but there are ways around it, right? You can do innovations on top of that network to counter that problem. But
Right.
security is essential, and that is why the blockchain technology was implemented.
Understood.
Moving forward, Bitcoin is a peer-to-peer cash system, right? What that means is that you directly interact with the other person when you're sending the Bitcoin. There is no need for banks, credit cards, payment gateways, right? So why is this important? This is important because when we were in the golden era, we used to transact directly with gold coins, right? There was no intermediary, and that is why the transaction itself had no cost, right? If you want to give some, if I want to give Nihal one gold coin, I would give it to him with zero cost, essentially zero cost, right? No one is taking any
Right.
cost out of the transaction. But right now, what happens in our current financial system, there are banks, credit cards, payment gateways involved, which take their own share because they are maintaining a network and we are going on that network and transacting, right? In India, people would say that, but the UPI network is free, but it's not actually free. The government is maintaining that network, so the government is paying for that network, right? And if you're paying taxes, you are actually paying for that network, right? So,
Yeah.
so nothing in the world is free, right? That's a very famous saying
True.
that there is no free lunch, and that is very valid. If you want some service to be done, you have to pay some cost for it, right? But what Bitcoin is doing is it is taking money back to the point where it was actually free, or it was very, very low cost. The cost was so low that it seemed free, right? So it is removing all the counterparties, all the third parties, and that is how
Yeah,
you bring efficiency to any system. You remove the counterparties. What did Uber do? Uber removed all the counterparties. You don't have to interact with any agents. You don't have to interact with any licensing department, any booth which has a ticketing system where you pay something and then the driver goes to the system and then he gets something and then he takes his cut. So all those intermediaries are removed, right? That is why the system becomes efficient and cheaper for people to transact with the system. Just a quick comparison. So the global payments network is known to have a heavy transaction fee, which ranges in 2 to 6%, sometimes even more than that, right?
correct.
And that is why Bitcoin becomes important, because
Yeah.
in within a country it might not be a huge problem, but when you transact outside of your country, it becomes a really huge problem.
One more thing to add here. So even in the Bitcoin network, when a person is sending Bitcoin from one person to the other, there is
Mhm.
something called a miner fee which needs to be given to the miners, but
Yeah,
that's negligible and comparatively very minuscule when compared to the entire banking system and how monies are transferred from one countries to the other. So the settlement. So consider this that as Bitcoin being a base layer, which is
yeah,
akin to your banks across the world, like international banks. So if you have to
yeah,
settle between those two, the transaction fees on Bitcoin network is, say, it could be maximum of $5 or $10 for any amount of money. So it does not make sense for a person. It may not make sense for a person to send, say, 10 rupees over the Bitcoin network. But then that comes, like, you have a second scaling solution to that called Lightning Network, which is beyond the scope as of now. We will discuss that in later sessions.
yeah,
Yeah,
definitely. One very quick comparison that I can give is Bitcoin blockchains are often called like ships, you know.
yeah,
So
yeah,
ships carry thousands of containers on top of them, right? So
correct.
so it is up to you if you want to send one person or thousands
Yes,
of containers on that ship, right? So the cost is fixed of running that ship, right? If you send
correct.
one person or one container on it, that container transaction becomes very expensive. But if you send thousands of containers, because the cost of the running that ship is fixed, so thousands
True.
of containers laid on top of that ship, the cost will be divided within those containers, and the cost will come to be a very low percentage, right? And that is what happens on the Bitcoin network also.
Yeah.
Yeah. Moving on, Bitcoin is often called a trustless network, right? So why this term, and how is that important? So what happens in the traditional financial system is that we trade with these fiat currencies which are issued by governments, right? But when they are issued by the government, they are secured by the government. But if that security fails, then there's a risk, right, that the currency can be diluted. Anyone can issue their currency if they find a loophole, and that is why the trust is required. How did you get this note or this currency that you are transacting with? Is this current currency genuine or fake, right? Was this really issued by the central bank, or was this issued by some mafia or some illegal person who is just printing money in his basement? So the trust factor really becomes important when the security is not there for that network. But that is what Bitcoin solves. Bitcoin makes the network so secure that it basically becomes trustless. No one can basically produce a fake Bitcoin. And that is why there is no trust involved within the network, right? If your Bitcoin wallet is showing you a Bitcoin balance, then you can be 100% sure that that is Bitcoin that you're holding, and that is the Bitcoin that you can send to anyone on the other side, right? If you want to. So that is why it is called a trustless network, right? Uh, one more point that is worth mentioning. So why is this requirement of trust so heavy in the current financial system? That is because we have 180 currencies across 197 countries, right? So the system is so broken that you need trusted third parties everywhere there where you go, because there are 180 currencies, right? So it's a very common thing to explain to anyone that when you make system very broken and very complicated, there are a lot of points of failure in that system, right? Whereas if you have one single block of metal, the point of failure is minimal. Like, the metal cannot bend, the metal cannot fail. But if you have a very complicated system where there are small metal attachments everywhere, joining each other, there are multiple points of failure, and the system can break, right? That is where you need a lot of maintenance, a lot of trust. Right? So that is what is happening with the current financial system. The system is so broken. There are multiple points of failure, because of which we always need to trust someone, and because of which there are so many counterparties or third parties involved whenever we transact on the network, right? And that is where again, Bitcoin is trying to solve, because it is removing these counterparties, because of which the network in itself becomes very robust and trustless, right? Moving on, how are bitcoins produced? So we know that the traditional currencies are basically issued by a central bank, and then they are given to the banks or some other institutions which are basically licensed to receive those currencies, and then they are floated into the market. But how are bitcoins produced, right? So bitcoins are produced uh, by the computers which basically maintain or run the Bitcoin network, right? So initially we were talking about the Bitcoin network, if we need to run it or not. Everyone does not need to run the network, but if you run the network, there's an incentive, right? You get Bitcoin as reward for contributing to the maintenance of the network, right? So there is no central. So the basic point is there is no central authority which is issuing the bitcoins. The bitcoin is being issued by the algorithm or the network itself to all the nodes which are contributing to the network, right? And this issuance also is a very rule-based issuance, right? So there are only certain bitcoins which are issued every 10 minutes whenever a block of transaction is processed, right? So uh, obviously everyone knows that government prints currency when they have the convenience and when they want to print the currency, and when they do not have any other alternative, right? So they do not think about what will happen to the people, or what will happen to the market, or what will happen to people's savings when they print the currency. But that is not how Bitcoin network works. In Bitcoin network, the rate of issuance is predetermined, so people have complete transparency and understanding of how the network will behave when they enter the network and they work on top of the network, right? So that is an immense improvement when you compare it to the fiat network. Obviously, there are financial implications. There are deep financial implications of this aspect, and we can discuss about that as we move forward with the presentation, right?
Sure.
Yeah. So this was the point that I was trying to make earlier. Uh, if you compare Bitcoin to gold, gold was basically the best form of money that was known to mankind for last 5,000 years. Right now, we have transitioned to the fiat network. So you can obviously compare, because Bitcoin is trying to be the best money possible. It can obviously be compared to gold, right? So gold was distributed across the world, right? You can say that God made sure that gold was accessible to humans all around the world, and not just one geography had access or one country had access to all the gold. That is why gold can be extracted and mined across the earth, right, and added to the supply in the market. But in Bitcoin, obviously, it's physical, right? So it's not limited to any region or geography. So then, how did Satoshi make sure that everyone had access to Bitcoin? He distributed the distribution of the so the creation of Bitcoin was distributed across time, and that is the graph which shows how this distribution was made. So there were 50 bitcoins issued for each 10-minute block which was processed in the first 4 years of that network, when the network was born from 2008 till 2012, right? And he made a rule that after every 4 years, this rate of issuance will go down by half. So 50 bitcoins become 25 bitcoins for the next 4 years, 25 becomes 12.5 for the next 4 years. So as you can see, that the supply increases very sharply initially, and then the increase in supply, it goes down. The growth rate of supply goes down eventually as you progress in time, right? So gold was distributed across geography, Bitcoin is distributed across time, so that no single generation gets all the Bitcoin, right? So next generations also have a chance to issue their own new Bitcoin by themselves, right?
Yeah.
So that's that's
To
kind of a
sorry.
that's kind of a
Yeah. To
beautiful
add,
distribution that Satoshi designed. Yeah.
right. Just to add to that, the rate of production of Bitcoin reduces by 50% every 4 years. We
Yeah.
just witnessed on April 20th in India, uh, Bitcoin halving, and that's why you see Bitcoiners all over the world celebrating this particular event, because your currency is getting more scarce day by day. And with this halving, the inflation rate of Bitcoin has dropped to 0.85%. Now
Yeah.
it is much more scarcer than gold officially.
Yeah,
So
because on an average, gold is known to be increasing by a rate of 2% every year,
yes,
whereas now,
yes,
as you said, Bitcoin is increasing by 0.85% every year, right? So the rate is lower than gold. So it
right,
conceptually it should be a better money than gold in that sense, right? But
true.
that seems to be seen. But we are hopeful.
Yeah,
Uh,
the price as of now probably does not justify it, but in time and with adoption, I think we'll get there. That's my belief. Yeah.
yeah, definitely. That's the belief of each and every Bitcoiner. Uh, Okay, so that was the uh, technical aspects of Bitcoin that I was trying to explain in my presentation, and now we move on to the financial aspects, right? Uh, Nihal, if you have any other technical questions.
No, we're good for now. And I think if there are any questions which is still not answered, this was a very broad understanding of Bitcoin on a very basic level. If
Yeah,
and I'm sure a lot of people would have a lot of questions about a lot of things that were discussed in the previous slides. If you have any certain questions, please feel free to drop your questions in the comments or approach me or Varun for further clarifications.
yeah,
Yeah.
yeah, sounds good. Okay,